As someone who's been investing for over 10 years, I'm still learning every single day, and there isn't a year goes by that doesn't surprise me in the stock market. But what about 2023? Well, this was no different, and I think there's been loads to learn whether you're brand new to investing or you've been doing this for longer than I've been alive. So here's 5 lessons for everyone that I think we can all pay attention to, and I hope that at least one of these helps you make more money in the future. Up first, anything can happen. I took a poll at the end of 2022 asking my subscribers what they thought the S&P 500 would do over the next year, and these were the results. It's no surprise what people thought because there was so much bad news ahead, a recession was almost guaranteed, and 2022 had been a really bad year for almost everything. Even safe investments like bonds had their worst ever year. Right now, when I'm recording this video, the S&P 500 stands at almost around 4,600 points. Now compare that to what my audience thought, only 6% of the votes were for anything above 4,400. And most people actually thought that the market would remain flat or maybe just go up a small amount. Now sure, that was only a few hundred votes and this is not some scientific study, but I just wanted to highlight the point that anything can happen in the stock market. In fact, let me show you something here that some of you may have already seen before. Now this chart shows us what the stock market did every year going back all the way to 1930. As you can see, the green bars are when it had a positive year, and the red bars are when it had a negative year and went down. Now, lots of people like to quote the fact that the stock market, or the S&P 500 at least, has averaged a return of about 9% every year for the past 100 years, and yes, that is correct. But what's the key word here? Well, that's just an average. You rarely get a year where you see a return of just 9%. Some years are really high, like you see here, and other years are really bad, like during the global financial crash. Some years you can get double-digit returns and still have more double-digit returns the year after. Some years the stock market goes negative but then has a great year in the following one. Some years the stock market goes down and then goes down the next year, and then even the next year after that gets even worse. Literally, anything can happen, and that's just on an annual basis. Good luck trying to guess what was going to happen from around March in 2023 until the end of the year. I mean, who saw that coming? Definitely not the majority of people, but anyway, hopefully you get the point. Anything can happen and will happen, but don't try and guess the future basing it on what happened the year before, because you'll probably end up with egg on your face. Next up, point 2. There will always be the next big thing or something hot. Rewind back to 2020 and 2021 for a moment. Remember when we had the meme stock craze, a record number of IPOs that never made any money, and even pictures of monkeys sold for hundreds of thousands of dollars? Every single year there's going to be that one stock or that one hot industry or just one monkey that captures everyone's imagination. It doesn't mean that you can't make money or maybe speculate a bit, but when everyone's attention is on the same thing, you quickly end up in a bubble as everyone expects that the price will just keep going up forever. Here's something I always find interesting. Let me show you this. On screen now is a heat map showing how different kinds of investments performed over the years. Now let me show you how this works. So each coloured square is a different kind of investment. You have everything from stocks, bonds and commodities. And then inside of that, you also have them broken down into each area. Now take a look at this. In 2021 and 2022, the highest performing investment was actually commodities. I mean, forget the stock market and the meme stocks. Oil and other commodities all went up in price as supply chains got stuck, and then we also had war break out. Now, what happens when something goes up a lot in one year? Lots of people assume that the trend will continue and it will keep going up in the year ahead. As humans, our psychology is very good at making up stories to reinforce our own biases, and we just can't resist those. Something like saying, oil prices have gone up and they will continue to go up because the world is falling apart, therefore better buy oil, sounds very plausible in our heads, but unfortunately, the market doesn't care what you think and will do whatever it wants. Now take another example on the heat map. Look at how well China did in 2017. Imagine how many people assumed that would continue and put a huge amount of money into those stocks. And then you even have cash winning in 2018, and you can bet the same thing happened. People chase those returns and try to get their bit. Now put that to one side and focus on the long term, this column here on the right. Here's where we get our average performances over the last 10 years at least. It's still not a guarantee that this is how things will perform in the future, but it does tell a different story compared to just looking at short-term results. In 2023, the hottest topic has obviously been AI. ChatGPT became the fastest growing app of all time when it took just 5 days to reach 1 million users. And since then, every single company in the space has been using the words artificial intelligence in every possible press release. Stocks like Nvidia have risen over 200% this year, And going back to the previous point, do you think this means that it will go up another 200% in the year ahead and just keep on growing? I mean, I have no idea, but I do know that many people will chase the gains because there will always be something that's hot and the next big thing. Next up, this point is true no matter what the year is, but I think it's a good lesson anyway from this year. The stock market is not the economy. Now, let me explain. So 2023 started with lots of negative headlines, right? We'd come out of a really bad year for investors where both stocks and bonds fell a lot. And there was definitely going to be a recession here in the UK and over in the US. There were lots of negative news out there, inflation was running high, interest rates would have to move up, and everyone was going to tighten their belts. So therefore, people assumed that the stock market would keep going lower and would have to crash because a recession must mean lower stock prices. And what happened? Well, as you know, pretty much the opposite. And I think it comes down to a very key point that the stock market is not the economy. The best way to explain and show this is to remind yourself that the stock market is a forward-looking thing. For example, take Apple, the biggest company in the world by its value. Apple is valued at over $3 trillion, and you get that calculation if you take the current share price and you multiply that by the amount of shares. Now, pretty much the same if you have a pizza worth $12 and it's got 12 slices, each slice would be worth $1. Now, what's interesting is Apple made a revenue over the last 12 months of $383 billion. And from that revenue, it made a profit of almost $97 billion. Now, that's a huge ton of iPhones, iPads, EarPods, and all of the rest of the stuff. Now, how can this company be worth $3 trillion when it's made a profit of not even $100 billion in the last 12 months? Well, this is because the stock market is forward-looking, and it's interested in future returns, so it's looking as far ahead as it wants. How far ahead does it look? What valuation does the stock usually have? Well, again, that's up to the market. During a recession, sure, the stock market will probably fall, as bad times ahead will mean less profits, less money coming in, so a company has to be worth less today. But some company share price could rise up, meaning no rule says that it has to come down. I mean, have a look here. If we look how the S&P 500 has done during recessions in the past, take the global financial crash as an example. The stock market peaked before the recession, no surprise there, but during the first part of the crash, it was still pretty strong here. What's interesting is that the bottom of the market and the recovery takes place still inside the recession. I mean, even though people would have no idea about the future, the market was taking a bet that things would be getting better. Trying to guess the tops and the bottoms of the market, even if I told you the 2 dates of a recession in the future, would be almost impossible because the market is forward-looking. It will also do whatever it wants because it's a market made up of so many different moving parts. Oh, and don't forget, everyone's crazy because we're human. And this leads nicely onto point number 4. Nobody knows anything. I think you have to be really careful when it comes to investing and making your own minds up about what to do with your money because everyone has their own opinion and their own agenda. On TV or in the financial news, you'll usually get extreme opinions. A bull case for something to go up in value or a bear case saying that everything's going to crash. You'll get price targets from people, warnings about some indicator that's flashed, or even another prediction from Kiyosaki saying that you have to just buy gold. Every day, there'll be a prediction made from very smart sounding people who are highly educated and speak really well. And once we hear them speak, we might assume that they must know what they're doing. I mean, they're the ones on TV after all, and they are the experts, therefore we have to follow their expertise. Unfortunately though, so-called investing experts or financial gurus are not in the same category as other experts in their fields. For example, if you asked 4 different expert plumbers to fix your toilet with the same issue, you'd probably get 4 very similar responses. They might do things in a slightly different order or use different tools, but they'd all find it and fix your problem. With investing, you get 4 different opinions with completely different views, all using different sources of evidence to claim to know what will happen in the future. With investing in the stock market, the future is not known, and unless that point changes anytime soon, everyone is just making a guess. If people were good at predictions in the stock market, the funny thing is that everyone would just copy that way of doing things, but by doing that, everyone would end up losing money as there would be no more edge. So think about this, if everyone copied someone's proven method, this would destroy the method. This is because you can't all buy in at the same time and all sell at the same time. The more people coming in and the more people coming out has an effect on the price. So you'd have some winners and some losers, and that's how the market works. Now, what I really wanted to add on to this point is a great quote from the late Charlie Munger. He said, "Show me the incentive and I will show you the outcome." For financial news media, which includes all of us here on YouTube as well, the incentive is to get as many views as possible. With more views comes more revenue from adverts across all platforms. Usually, the more extreme views, like saying the market's going to crash with some scary headline, or using flames and shock faces in your thumbnails, will attract way more people. That's just human nature. People say they don't like clickbait and that they hate the negative news, but it is a reflection of what works, and we are wired as humans to click on the fear or open that headline. Going back to Charlie's point, if the incentive for the financial news is to get more views because that means they get to charge higher amounts for their advertisers, then what do you think the outcome will be? Now, I think it's pretty obvious. Lots of fear, lots of extremes, and loads more scary videos and headlines that you will click on. And from that, you'll probably make loads more trades and way more investment decisions than you would have done without them, which, funny enough, also generates money on the investing apps and platforms. They love it when you keep trading in and out, chasing those gains. Anyway, just be careful with what you pay attention to, but more importantly, be really careful with what you do after you pay attention to something. You have to be so careful here, as this is your money and your financial future, and only you can make the best decisions for you. As always, I'm not a financial advisor either, so please bear that in mind too. And this leads us to our final point, which again is probably something you could say every single year. Stick with your plan. Now, each year is going to be a roller coaster in the markets, but that's just one part of your life. The rest of your life is going to be an even crazier ride, and if you're anything like me, you've got no idea what the next day holds, let alone the next year. As you saw earlier in the video, any single year can give us crazy results from one investment to the next. One year it's oil stocks, the next it's NFT pet rocks, electric cars because it's the future bro, or now AI that can't draw hands. We've got all kinds of things fighting for our attention on every kind of device, and we can find a million different reasons why we suddenly need to change our thinking and jump on the latest hot thing, because otherwise we'll miss out. I'm sure right now one of you is probably watching this on your phone while on the toilet and your name is David. If that is you, then hello, but please don't forget to wash your hands and hit the like button. This video took a very weird turn. Anyway, thanks for that, David. The point I wanted to make was that it's your choice to find a plan that works for you. Now, none of us know the future, but we can show that if you are a long-term investor and stick with the plan, you're very likely to do pretty well and end up with nice-sized investments. It's definitely easier said than done though, and what's funny is that most people won't do it. And at some point, they'll either give up and stop, or they'll just sell out and think that investing is some massive gamble. Now, to help you stick with the plan and to invest in a way where you can never lose, this is the video you need to watch, where I go through the only 3 things that you need to focus on as an investor. If you follow those 3 things and remember the lessons from this year, I think you'll do pretty well. Anyway, go watch that video, and I'll see you in the next one. As always, happy investing.